Hello and welcome to today's office hours where we will discuss the de minimis rate and indirect costs. Typically, indirect costs are calculated by a budget analyst or an accountant, so this presentation is meant to be an overview of the de minimis rate and indirect costs. Please note that if your calculations are slightly off, that will not automatically disqualify your application. This presentation on the de minimis rate and indirect costs applies only to the Track 1 infrastructure grant. Track 2 Simplified Equipment Only grants are not eligible for indirect costs. If you are applying for an RFSI Simplified Equipment Only grant, this presentation does not apply to your proposal. What are indirect costs? Indirect costs, also known as facilities and administrative costs or F&A costs, are any costs that are incurred for common or joint objectives that therefore cannot be readily and reliably identified with an individual project, program, or organizational activity, but are nevertheless necessary to the operation of the organization and the performance of its programs. Indirect costs generally include facilities operation and maintenance costs, depreciation, insurance and indemnification, and administrative expenses. Examples of indirect costs. The following are examples of some typically considered indirect costs: the salaries of administrative and clerical staff, information technology services, rent, utilities, facilities costs, mobile and landline telephone service, internet, etc., insurance and indemnification, maintenance, general use office supplies like paper, printer ink, pens, etc. What is a de minimis rate? De minimis rate refers to the percentage of the modified total direct costs, or MTDC, that can be used by non-governmental entities who do not have a federally negotiated indirect cost agreement, or a NICRA. The de minimis rate is calculated at 10% of the MTDC. The 10% de minimis rate was designed to reduce burdens for small, non-federal entities. If your organization has a rate that has been used for another state grant program, including a CDFA grant, or another policy that is not federally approved, you still must use the 10% de minimis rate for RFSI. What is a NICRA and does my organization have one? NICRA stands for Negotiated Indirect Cost Rate Agreement. A NICRA is a formal written agreement between an organization and its cognizant federal agency describing how the organization will calculate indirect costs for reimbursement. If an applicant organization has a NICRA, a copy of the NICRA must be submitted with the application via the Uploads tab on the budget page in Amplifund. If you are unsure if your organization has a NICRA, it is likely that your organization does not, but please consult with your budget office for clarity. What is a modified total direct cost? More information on the MTDC can be found in the request for proposals. Keep in mind that modified total direct cost includes only grant-funded costs, not matching funds. We'll dive deeper into this in the upcoming slides. At this point, you may be wondering how to calculate the 10% de minimis rate. Any organization using the de minimis indirect cost rate must first calculate its modified total direct cost by adding up all eligible components and then multiplying the number by 10%, and that will equal the amount of allowable indirect costs. So what are the eligible components of the modified total direct cost? The eligible components of modified total direct cost in the budget section include categories A, personnel, B, applicable fringe benefits, C, travel, E, supplies, and some costs in H, other. The category D, special purpose equipment, is not included in the modified total direct cost when calculating the 10% de minimis rate. F, construction, and G, contractual, have their own rules, which we will discuss in a few slides. Let's take a closer look. When calculating the 10% de minimis rate, the eligible components of the MTDC and the expense budget include A, personnel, B, applicable fringe benefits, C, travel, E, supplies, and only some of category H, other. This excludes category D, special purpose equipment. And special rules apply to F, construction, and G, contractual, that we will touch on soon. Note that only grant-funded costs can be included in MTDC. Matching funds, like in-kind and cash match, cannot be included. Let's move on to an example. When calculating the 10% de minimis rate, we're going to look at the grant-funded portions of the eligible budget components. Using the example budget on the left, we can see that the grant-funded personnel amount is $0. The grant-funded fringe benefits amount is also $0. The grant-funded travel amount is $167.50. The grant-funded supplies amount is $3,241.56, and the grant-funded other amount is $1,208.50. In this case, the full grant-funded amount in H, the other category, can be used because it is a subscription fee and not one of the excluded MTDC costs. Some common costs frequently in H other that are excluded from MTDCs include rental costs, tuition remission, scholarships and fellowships, and participant support costs. Refer to the request for proposals for the complete list. Remember, the modified total direct cost includes up to the first $25,000 of each subaward, regardless of the period of performance of the subawards under the award. And again, the MTDC includes only grant-funded costs, not match costs. So what does up to the first $25,000 of each subaward mean? It means that in addition to adding up the eligible components of the MTDC and the other categories expense budget, you can also add up to the first $25,000 per contractual entity in budget categories F construction and in category G contractual. These are the special rules mentioned a couple of slides prior. Let's take a look at it. Referring to our example budget, you can see that line F construction has a grant funded total of $33,500 and line G contractual has a grant funded total of $3,000. Since you can include up to the first $25,000 of each subaward, you can add $25,000 to the MTDC for line F construction, and you can add the full $3,000 towards the MTDC for line G contractual. $25,000 plus $3,000 equals $28,000, so you would add $28,000 to the modified total direct cost. Let's do the math. If we add up all of the eligible modified total direct cost components, we get the sum of $32,617.56. Remember, the de minimis rate is 10%, so we are going to multiply the sum of $32,617.56 by 10% or 0.1. That equals $3,261.75. We ask that you round up to the nearest whole dollar, so in this example, the indirect cost amount would be $3,262. Applicants are also welcome to add what is known as unrecovered indirect costs to their in-kind matching funds. To do this, calculate the de minimis rate using the same rules, but this time for costs covered with matching funds. That is, the eligible components for unrecovered indirect costs include only the non-grant funded amounts. Unrecovered indirect costs also allow up to $25,000 per contractual entity paid with matching funds. You can see those numbers on the bottom right of this slide. Now let's do the math. If we add up all of the eligible non-grant funded components, we get the sum of $102,617.56. We know the de minimis rate is 10%, so we are going to multiply the sum of $102,617.56 by 10% or 0.1. That equals $10,261.75, and we ask that you round up to the nearest whole dollar, so in this example, the unrecovered indirect cost amount would be $10,262. Applicants may add this to their in-kind matching funds. As a reminder, CDFA is available via email to answer questions at grants@cdfa.ca.gov. This concludes the RFSI de minimis and indirect cost presentation.